What's up, guys? Prodigy here, bringing you guys back another fire ass video from Learn Option Trades. In this video, we're gonna go over the relative strength index, RSI for short. Now, if you're not somebody that's too familiar with indicators at all, this is one of the best videos you can land on for beginners to learn even what indicators is. Probably one of the best indicators you can use as far as beginners go because it's super simple to use. And we're gonna go over two ways you can actually use it. We're gonna go over a simple way, and then we're going to go over more of a technical way that a lot of swing traders use it as. And it's probably one of the most effective ways you can use RSI. So, guys, let's get right into it, guys. Let's get right into it. So if you're on desktop and you pull up the RSI and you go into your studies, you type it in, you pull it up, it's going to look like this on your desktop. It's going to have a yellow line at the 70 mark and a yellow line for the 30 mark. Same thing if you're on the phone. Pull it up on TOS, you're on TradingView, whatever. It's going to look pretty similar. It's going to have a 70 and a 30 on your RSI. Those are the two numbers that you practically want to look out for, and those are the ones that we're about to break down right now. So there's two ways to read it, like I said, but we're going to go over the first and simple, easy way to understand RSI, and it's by understanding the oversold and overbought levels. So 30 is representing oversold, 70 is representing overbought. You can see on this quick example on the RSI that we did reach well above 70, and we got back in for a nice pullback on the RSI. So all it's representing is that when the stock is increasing in value, the RSI is practically following it, and when the stock is oversold, the RSI will show. When it's getting well overbought, the RSI will read and let you know that, hey, this stock is it's getting bought too much and it's due for some type of pullback, but not always. So we're going to go over that. So let's go over not a live chart, but let's go over a chart example of how you can read it with the RSI. So you can see the RSI is below my volume. And you can see right here between Monday and Tuesday in September of 2022 on the S&P 500s, you can see during after hours and pre-market, we hit oversold below 30 on the RSI. I even have it written right here for you guys. Oversold below 30 on the RSI during pre-market and after hours on the S&P 500s. So the S&P 500s is hitting a nice oversold indicator on the RSI, and look, we do get a nice little decent pullback to the upside, and even during the trading hours we continue on up. So we continue on up, and you can see that during the next day, which is a Wednesday, we even hit overbought on the RSI, indicating that this stock, just too many people are buying this shit, man. This shit gotta have some type of nice pullback or some decent pullback or some type of something for this RSI to at least get a little bit of a breather, but not always. So we're gonna go over that too. I don't want you guys to 100% buy puts, pull your whole portfolio on this just because the RSI is reading overbought or oversold. So you can see that after we hit oversold on the RSI, and during the after hours and pre-market, we practically tank hella hard back down to some nice oversold levels on the RSI. And you can see in this example, this is a perfect example. We're well below 30, guys. Well below 30. We probably hit below even 20, probably in the 15 on the RSI. And we still went lower, pretty much indicating that, look, it can go lower. So not always do you want to just straight up buy calls right away as soon as the RSI is shooting an indication of oversold on the stock. So, but you can see in this example, we actually did get bought right back up and get a nice bounce to the outside, like some bounce that ass. So you can see that even after we do get that bounce, during the after hours and pre-market, it almost hits overbought. Almost. Practically tapping it, not really, but we come now back down and get a nice little pullback, create some type of little pattern, bearish pennant, and we come back down again. And look at this one, this third and last example of an oversold example. The RSI and the stock gets sold off to a nice well level, and in this example, we go just below 30 and get bought right back up after hours pre-market like crazy, and we get overbought on the RSI. So that's a real simple way, and we're going to go over another example too. But that's pretty much a quick and easy, simple way on RSI being oversold and what it looks like on the S&P 500s. So real quick, we're gonna go over an overbought example, and then we're gonna go over after this the real technical way to really effectively use RSI during trading and how you can get real deep into it. So, quick example on the overbought side, guys. Look at this is on the 5 minutes for all you 5 minute people, for all you people that love to go on lower time frames. Somebody like me too. Talking to myself, I do like lower time frames myself as well. So look at this on the 5 minutes. We, right before open, during the AM, we get some nice, depending on where you're at this AM. So we get some nice highs, and look at the RSI. RSI is indicating overbought, well overbought. I mean, it's well above 70. Then we get a nice little pullback. Then again, we get well overbought, and then we get a nice pullback again. Now, there's something that we're gonna go over to in the next slide that is real technical, but I am curious if you guys can see it already. Let me see if I can. I might draw it real quick just to have your guys' minds thinking about it, while I continue on with what's going on. So you can see that, yeah, we do get overbought twice on the RSI, and we do get a nice little decent pullback. I would not rely heavily on it. I would not buy puts right out the gate just because it's indicating that we're overbought. And then next example, the next day, same thing happens again. Pretty much the same setup. We're just uptrending all these 2 days. We're just uptrending. Higher lows, higher highs. All right, we're just uptrending, guys. So anyways, RSI is indicating again we're overbought. Right around the AM, overbought. Same thing around, we almost hit overbought level, just below 70, and we create some higher highs. Look at this. We're about to get right into this, but it's practically setting me up for what we're about to get into. So guys, if you can already get an idea what we're about to get into next, this is pretty much how you can get into the RSI. So anyways, look at this example, or these two examples, which is the overbought on the RSI indicating overbought. So guys, that's the quick and easy that's the quick and easy simple way on how you can understand RSI from being oversold when it hits below 30 and being overbought when it's above 70. So that's a quick 2 examples and the most simplest way you can read RSI. So what we're about to get into next is a little bit more technical, but it's the most effective way you can possibly read RSI and use it into your advantage on trading. So, and guys, I don't have anybody here with me to ask questions to see if this is making sense for anybody. So if it's not making sense for you, please reach out to me. Message me. My name's Protege and Learn Option Trading in the Discord. And feel free to message me and ask me anything. I'm passionate about teaching people. I would love to teach anybody and everybody. And if it's just something that you're not understanding or you can't grasp your head around, feel free to message me, and I'll go over this with you, and we'll get it until you understand it. So, but anyways, let's move on. Like I said, I don't have anybody here with me to ask questions. I would literally love that, but I just don't. And hopefully over time, that does happen. So let's get into the second way. And guys, we're already almost done. We're about to wrap it up pretty soon. There's only about 3 more slides left. But let's get right into the most effective way you can read RSI, guys. The most effective way, in my opinion, that you can read RSI. So it is more technical, but it's very useful. And as you can see in the last slide that we had, I kind of already drew and gave you a hint on what we're going to go over. So this phenomenon is called convergence divergence. Now, you don't need to actually remember that, and you don't need to go to somebody and be like, do you know about the convergence divergence? No, you don't need to do that. Just understand, if you do know this, it's probably one of the most powerful ways to read RSI. Seriously, it really is. A lot of people use it this way. A lot of swing traders, a lot of people that I look up to, a lot of people that are making, triple digits to $1 million portfolios are using RSI this way. And some people probably don't even use RSI, because honestly, I don't use it every day either. So it's when the stock is increasing in value, and I'm going to draw that out before we get into real nice examples. But it's when the stock is increasing in value, but the RSI is decreasing. Now, I wouldn't really say in value. I guess it is in value, but the RSI is decreasing, but the stock is increasing. Or in another scenario, the stock could actually be decreasing, but the RSI could be increasing. So that would actually, so in this scenario where the stock is increasing, but the RSI is decreasing, that is bearish. I know it's so ugly. Now when the stock is decreasing, but the RSI is increasing, that is a bull indicator. It's just indicating for a potential reversal. So not always do you get this. It's just something to look out for, and honestly, it does help with the momentum. Hence why RSI is called relative strength index. It's just showing you like where the strength is at, who's here. So, anyways, let's get right into it, guys. Let's finish this quick and strong. We're already 15 minutes almost in. Let's get right into it. So, like I just said, the convergence, divergence, when the stock is increasing in value, but the RSI is decreasing. So the stock is creating higher highs, meaning that we're just creating higher highs. Like, I mean, we're just increasing, creating some new highs, hitting new levels that are higher than the previous. So the RSI well overbought, but creating lower highs, meaning that we're decreasing, but the stock is increasing. So what can you make out of that? That's a bearish indication. And so all it's just telling you is that there's a potential reversal that's going to happen here soon. And like I said, guys, don't rely on it 100% all the way. But let's say you use this tool with your many other tools that you have in your tool belt, as far as your technical analysis, your support and resistance levels, or your supply and demand zones, or whatever it is that you use in your strategy. And this is just one that you add. So let's say in this strategy, you're noticing on the hourly, because this is the hourly. So on the hour time frame, we're noticing that the the stock is creating higher highs, but the RSI is creating lower highs. And you can see that we're in this nice little formation right here, trending up. But now we finally get that bearish indication that we were looking at on the RSI, which is what happens right here. So guys, look at this. We get that bearish break. Look at the RSI right here. This RSI is indicating that we hit a nice 30 level, indicating that, hey, we're getting oversold around here. And look at this. We do get a nice little bounce. One more little bull push until we create another formation. Sorry, guys. It's so ugly. I'm sorry, but keep up with me, please, because I really want to point you guys out on something that can really be effective in your trading strategy. So you can see on the hourly time frame that we do create that bearish indication on the RSI, creating higher highs on the stock but lower highs on the RSI. We get that bearish break, but bulls try to say that we're oversold, and they try to bring us up for one more last push and hold us around these levels. But look at this. We get another bearish break on this pennant that we formed. And this time we're back in RSI oversold levels, indicating that, guys, like, we're well oversold. Like, we need some type of pullback to the upside, because look how much we're in the waters of being oversold. We're pretty deep. We're probably like below 15 right here. 15 RSI, meaning like we're well oversold, guys. So let's wrap it up. Let's get quickly into it. Let's go. So look at this example. Now that was a bearish case. So one more time. Let me try to do this quick. So that was a bear case. Look at this bull case right here. Lower lows on the stock, but we finally create some higher lows on the RSI. We finally get some type of bullish indication after all of this bloodbath sell-off and some long time in the below 30 levels of the RSI. So we finally get some bullish indication, and we do finally get some nice breaks to the upside. You can see if you were to have some type of support right here, and you were like, I'm going to take some calls on the break on the upside. So we finally do get that break to the upside. But look at this, guys. Pay attention to this. So this was a bull case on the hour time frame. We get that little break to the upside. But look at this case right here. Look, this is the third example of a convergence divergence when the stock is creating something different than the RSI. So higher highs in this one, and I want you guys to decipher for this one for yourself. Although you can already see what happens. Look at this. This is where we did it at. Higher highs, lower highs. What do you think is going to happen here? Higher highs, but look at the RSI, lower highs. So we do get that final break to the downside. And if you were to draw your technical trend, you can see that, oh, we finally get that break. So that is just how you can use that. And guys, let's go into another quick example for all my 5-minute time frame people. Guys, I ain't forget about people like me. So this is on the hour time frame. This is for people that are more for swing traders. And this is something I look at too always, because you have to be looking at the macro first before you can just look at lower time frames and try to take trades only on lower time frames. So guys, hopefully that made sense. Let's get into it on some 5-minute time frames and how you can use them on lower time frames. So hopefully that made sense, guys. We are going to go over just these last 2 slides. Bear with me. And this will be the last thing, and I hope this puts the cherry on top for you guys. I really do. I hope this does. So look at this quick 5-minute example. All day we create some higher highs, and we're kind of just trending ugly. In my opinion, this is like some choppy, ugly ass action. Like, this price action is ugly, and it is due to some news that drops at 11 a.m. But you can see that we create some higher highs on the stock. But look at the RSI. We're creating some lower highs on the RSI, indicating, in this case, a bear case. And guys, I wouldn't bet 100% on these because they don't always play out, but it's just something to look for and keep in mind while you are observing the market. So overbought 70, 30 being oversold. You can see that creating some higher highs on the stock. And we're also well above 70, meaning that, guys, we're overbought. And lower highs on the RSI, indicating a bear case. So we finally do get that bear case that you would be anticipating for or waiting for. But somebody might say, this is 11 a.m. This happened because news came out. And you're right, news did come out. So let's look at another case. And this is the last example of another. This one's a bull case this time. So this one's a bull case, and we'll go over why it's a bull case in a quick second. But let's go over this last example, and I hope this puts the cherry on top, guys. Please message me if you still need some extra help. So look at this. Look at this case. Some lower lows on the stock, and we create some higher lows on the RSI. So that's indicating a bullish scenario, and I'm going to put bull just so you guys can see what scenario we're always looking at. So this is a bull scenario, creating some higher lows on the RSI, lower lows on the stock. Like I said earlier, convergence, divergence, when the stock is creating higher value, but the RSI is creating lower value. Sorry guys. When the stock is creating lower, but the RSI is going higher, that's the bull case. And like, this is that bull case. Stock is creating lower, RSI is going higher. Now we create that bull case. If you were to add your technical analysis, your filthy STA that we all have, and if you don't, you're going to learn it here with me. You can see that we finally get that bull break to the upside. And guys, that's pretty much it, and wraps it up for RSI. If you have any more questions, feel free to message me. This video was already practically a little longer than I expected, but feel free to message me. I'm always here to help anybody. And to just do a quick recap to refresh people's minds. Quick 30-second recap. Guys. Bear with me on this one. So RSI, 70 being overbought, 30 being oversold. The real simple way to use it is understanding that when something is oversold, it's because the stock is getting sold off and the RSI is reading that we're oversold. Overly bought means that we're hella high in price, getting bought up pretty high, and the stock is due for some type of, pullback to the downside. So that's what that is. So that's the real simple way. The second way, which was the more technical way, is understanding the convergence and divergence. When the stock is increasing value but the RSI is decreasing, that's a bear case. And if it's the opposite, it's the bull case. So quick example, created some lower lows on the stock, higher highs on the RSI, got that bull case, higher highs on the stock, lower highs on the RSI, bear case. So guys, please message me if you guys still need help on this. I'm all ears. I'm willing to help anybody. And thank you guys for listening. Appreciate you guys. Prodigy here with Learn Option Trades, and feel free to message me.